Hi everyone, in this video we will be going over A-Level Accounting 2022 May-June Paper 3-2 question number 4. This is the structured paper 3 which consists of 6 questions. Each of them will be of 25 marks and we're also given a time limit of 3 hours, which means that ideally we should be spending about 30 minutes in order to complete each question. And in this video as well, we will be attempting to solve this question number 4 under 30 minutes. So without any further delay, let's get started. Alan and Bobby were in partnership, sharing profits and losses in the ratio 3:2. The partnership's statement of financial position at 31st March 2022 was as follows. Alright. Then a company, Limited, acquired Alan and Bobby's partnership's business on 1st April 2022. The company acquired all the assets except the bank account and a motor vehicle, and the motor vehicle was taken over by Alan at the value of $18,000. The partnership paid $45,000 in full settlement of trade payables. Now, the value of assets taken over by Limited is given below. It's of $730,000, and the goodwill of the partnership was also agreed at $40,000. So these are the value paid by Limited for tangible assets, and for our intangible asset of goodwill, Limited decided to pay $40,000, which means that the total purchase consideration is going to be the value paid for tangible assets, which is $730,000, plus the value paid for intangible asset of $40,000, which gives the total to be $770,000. Alright, then the purchase consideration was settled by $1 ordinary shares in Limited at the value of $1.40 per share, and the shares were split between Alan and Bobby equally. So this just means that Alan as well as Bobby will receive half of this amount in the form of ordinary shares. So that will be $770,000 divided by 2, which results in $385,000. Alright. Now, for the first part of this question, we need to prepare a statement showing the partner's share of profit or loss on realization. So in order to figure out the partner's share of profit or loss on realization, we just need to find the difference between the value at which all of our assets and liabilities are taken over and the actual value of those particular assets according to the given statement of financial position. So in this case, we can see that the purchase consideration was of $770,000, and this did not include the value of asset, which is $18,000, right? And then we also know that partnership paid $45,000 in full settlement of trade payables, but we can see the trade payables value according to our statement of financial position is $46,000, which means that we had to pay $1,000 less in order to settle this trade payable. So we can term it as the discount that we received for trade payables, which is kind of like an income. Alright, so the total amount we got in settlement could be the purchase consideration, the asset taken over, and then the discount received by trade payables. So let's write it down. We first start with our total purchase consideration, which was of $770,000. Then we need to include the asset taken over, which was motor vehicle, and it was taken over by Alan at the value of $18,000. And then we also got our discount on trade payables. So that's trade payables discount of $1,000. Now let's figure out the total of these three amounts. That's $770,000 plus $18,000 plus $1,000, which results in $789,000. Now, in order to figure out whether there was a profit or loss, we just need to subtract all of the values of these purchase consideration, motor vehicle, as well as other assets according to our statement of financial position. So let's have a look above. We can see that all of the non-current assets, land and buildings, equipment, and motor vehicles were taken over. So let's figure out the total value. According to our statement of financial position, it was valued at $565,000. So we need to subtract it now from the total of the purchase consideration and all of the assets taken over. Let's write it down. So that will be the non-current assets, which was a $565,000. And this should now be subtracted. Then we also know that other assets were taken over except for bank and the motor vehicle. Let's have a look. So that includes inventory as well as trade receivables of $75,000 and $93,000 respectively. And we do not include bank because we are clearly told that all of the assets except the bank account was taken over. Let's write it down. So now we have inventory and trade receivables. and inventory was of 75,000, whereas trade receivables was of 93,000. So this includes all of our assets and liabilities as well, because we only included the discount for liability. Okay, now we can figure out the total profit or loss by adding these four amounts. So that's 789,000 minus 565,000 minus 75,000 minus 93,000, which results in 56,000. Since this is a positive amount, this just means that we get profit on realization. Now we need to divide this profit among our two partners, Alan and Bobby. And this will be based on the previous profit sharing ratio. So let's have a look. We're told that the previous profit sharing ratio is 3:2, which means now the profit on realization for Alan is just going to be the total amount times 3 out of the total 5 parts, which results in 33,600. For Bobby, we again start with the total amount, and Bobby gets 2 out of 5 parts. So this results in the amount of 22,400. This concludes the first part. Let's move to the second one. We now need to prepare the partners' capital accounts in columnar form to show the closing entries. All right. So this is for Bobby. And this will be for Alan. Okay, then again, this is for Bobby. And this will be for Alan. And since we're talking about our capital accounts, the opening balance is always going to be on the credit side. Let's have a look above in our statement of financial position. We can see that the capital accounts for Alan and Bobby were 400,000 and 320,000 respectively. Let's write it down. So that's balance brought down of 400,000 and 320,000. And now, since the partnership no longer exists because it is being acquired by Limited, we should also be adjusting all of their current accounts. Okay, we can see the current accounts right here. So a negative balance just means that this amount should now be subtracted from the capital account, which means that this will go towards the debit side, whereas a positive balance means that it should be added towards the capital balance, which means that this amount will go towards the credit side. Let's write it down. So for Alan, it was negative 6,000, which should go towards our debit side. So that's current account, 6,000. And for Bobby, it was positive balance. So that's current account of 25,000. Now, we also figured out that there was profit on realization, which will definitely increase the capital account balances, which means that these two amounts should be included in the credit side. Let's write it down. So that will be 33,600 for Alan and 22,400 for Bobby. Then we also know that Alan took over a motor vehicle worth 18,000, which means that he needs to pay this 18,000 back into the partnership, and while paying this amount, it will definitely decrease his capital account balances. So this amount of 18,000 should be recorded on the debit side. Let's write it down. That is motor vehicle worth 18,000. All right. Then we also know that Limited would settle the purchase consideration by issuing shares. And we have already calculated that Alan and Bobby will be getting 385,000. So this is for the settlement of acquisition. And the settlement amount should always go towards the debit side. Let's write it down. And this goes towards the debit side because it is basically adjusting the capital account balances or repaying the capital account balances. So that will be Limited, where each Alan and Bobby will be getting 385,000. Now we need to figure out the balancing figure, which will be adjusted through the bank account. In order to do so, let's first figure out the total of these four columns. So for debit side for Alan, that will be 6,000 plus 18,000 plus 385,000, which results in 409,000. For Bobby, that will be 385,000. For the credit side of Alan, that will be 400,000 plus 33,600, so that's 433,600. And for Bobby, that will be 320,000 plus 25,000 plus 22,400, which results in 367,400. Now for Alan, we can clearly see that the heavier side is the credit side. So this will be the total. It should be the same for debit side as well. And now the balancing figure will go towards the debit side. So this balancing figure is just going to be the difference between the total for these two sides. So that's 433,600 minus 409,000, which results in 24,600. And for Bobby, we can see that the heavier side is clearly the debit side. So the total is going to be 385,000 for both sides. And now the balancing figure will go towards the credit side. Again, this will be the difference between the total from two sides. So that's 385,000 minus 367,400, which results in 17,600. And this concludes the partners' capital accounts as well as the second part of this question. We can now move towards the third one. We now need to prepare the journal entries in Limited's books to record the acquisition of the partnership business. Okay, so this requires a debit side as well as the credit side. And we are recording this in Limited's books, which means that all of the acquired assets will go towards the debit side, right? And all of the payments made by Limited will go towards the credit side. Let's have a look above. We know that Limited is acquiring the land and buildings, equipment, motor vehicles, inventory, and trade receivables with these values. So all of these 5 items along with the goodwill of 40,000 should go towards the debit side in the journal entry. So that's land and buildings of 410,000, equipment of 132,000, motor vehicles of 30,000, then inventory of 70,000, trade receivables of 88,000, and the goodwill of 40,000. Let's write it down. Firstly, we have land and buildings. It was of 410,000. Then we have equipment, which was of 132,000. Then we have motor vehicles of 30,000. Then we have inventory of 70,000. Then trade receivables of 88,000. And finally, we have goodwill of 40,000. All right, now we need to look for its settlement. And we are told that the settlement is done through providing ordinary shares, which have the nominal rate of 1, but these ordinary shares are being provided at the rate of 1.40, which means that there will be ordinary share as well as the share premium. Let's write down the heading. So that's ordinary share, capital, as well as share premium. Let's have a look above. We know that the total amount for our share capital to be issued is 770,000, and this includes $1 of our ordinary shares as well as $0.40 of our share premium, right? So the total is 1.40. Now, in order to figure out its value for ordinary shares, we can just utilize our unitary method. So out of the total of 770,000, 1 out of 1.40 belongs to ordinary shares. So that's 1 by 1.40, which results in 550,000. Now for our share premium, we have the total of 770,000, and 0.4 out of the total of 1.4 belongs to it. So that's 0.40 divided by 1.40, which results in 220,000. Let's write down these two amounts in our journal entry. So that's 550,000 and 220,000. Now the total for both the debit as well as the credit side will be the total of the purchase consideration, which is 770,000. All right, this concludes the third part of this question. We can now move towards the fourth one. We now need to define the term intangible asset. So an intangible asset is an identifiable but non-monetary asset, and it has no physical substance, which means that we cannot see it or touch it. Let's write it down. An intangible asset is an identifiable non-monetary asset without physical substance. Okay, this concludes the fourth part of this question. We can now move towards the fifth one. We now need to discuss the reasons why the purchase consideration was more than 730,000. So firstly, we know that 730,000 was paid for all of our tangible assets, whereas Limited also pays 40,000 above the total value of tangible assets as the purchased goodwill. Let's write it down. Limited pays 40,000 above the total value of tangible assets acquired as purchased goodwill. And what we know about purchased goodwill is that it is just the excess of consideration or purchase consideration over the fair value of net assets acquired. Let's write it down. Purchased goodwill is the excess of consideration over the fair value of net assets acquired. Then we also know that this purchased goodwill might bring future economic benefit to Limited. Let's write it down. Goodwill will bring future economic benefit to Limited. And we could also write about goodwill. Goodwill is basically the image or the brand image of the business that is created over time through good reputation. And this could be because of the high quality product provided by the business, or the suitable location to all of our customers, or any good relationships maintained with our customers, as well as the competent as well as efficient staff. Let's write it down. Goodwill is created over time through good reputation, because of high quality product, location, good relationship with customers, and a team of efficient staff. Alright, this concludes the fifth part of this question. We can now move towards the sixth one. We need to advise the directors whether or not they should have paid more than 730,000 for the partnership by justifying our answer. So since this is of 3 marks, we should be writing 1 point for, 1 point against, and then 1 for decision. So if we make the payment of 40,000, which is for the excess goodwill, then the company will receive future economic benefits. Let's write it down. The company will receive future benefits in excess of 40,000 paid. But since this 40,000 belongs to goodwill, it is also difficult to accurately value the goodwill. It is difficult to accurately value the goodwill. Okay, now we need to write down our decision clearly. So I would say that this is a good decision since this goodwill will bring future economic benefits. And the directors should have paid more than 730,000 for the partnership. This concludes the sixth part of this question as well as the entire question number 4 of 2022 May-June paper 3-2. If you found this video useful, make sure you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.